Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, February 12th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here the ES trading in a very narrow range, compressing narrow range. It's a double inside day at the moment, and if you look at it from this perspective also, you got kind of a diamond shaped pattern here as well, which can typically be a pattern of exhaustion and perhaps even a reversal. We've talked about the fact that this market has lost some steam at these highs right now. After a very strong start to the month, you'll see here we've just basically gone sideways above the previous month's high price and above the previous week's high price as well. And so right now, this could appear to be some exhaustion at these highs. A rounded top is also developing here, kind of in the 60-minute time frames. All of these kind of point to a potential pullback to come. With a holiday shortened week coming up in the upcoming week and the observance of President's Day here in the United States on Monday, we could continue to see range-bound price action heading into the weekend. But soon we could be looking at some sort of breakout, one way or another. Likely, we could see some sort of breakdown first, followed by, again, another reversal to the upside until proven otherwise. So again, continue to watch this range, avoid the chop within the range. Eventually, we may see expansion from this range. When we do, it could be significant. If you look down here on this 5-day range basis right now, we're 30% of average 5-day range. That means that whenever we do see a breakout, we could see a move of about 190 points. So right now we're at 3,900 even. That could take us all the way back toward about 3,700, which is basically giving up all the gains that we would have had for the month. So if we were to break down, there could be about 190 points to the downside. That would take us right back to where we began the month. So right now, watching this range, it continues to build energy. Overall, the market remains very strong. So even if we were to see some sort of pullback, there could be a rejection and reversal for new highs until proven otherwise. All right, let's take a look at the NQ. You'll notice the NQ is also showing compression at these highs. Very narrow range here. Again, an inside day, double inside day. Very narrow compression on the 5-day range basis here. That's 38% of average. We could see a move somewhere north of 700 points of range. And right now we're at 13.7. So a pullback of 700 points could take us right back to the monthly pivot range, the pivot point, and 13K evens. But again, this market remains very strong on the whole. And so any pullback, even of that magnitude, very similar to what we saw to end January, could still be an opportunity to buy for more strength ahead until proven otherwise. All right, let's take a look now at crude oil. Now this one has also developed a range at highs. But we're now seeing a bit of a failed low that's developing. Right now, price is approaching the midpoint of the previous session's range. That's going to be a major test here today because we've seen lower highs and lower lows over the last 3 days. If there's a failure to get beyond 58.28, the previous session's midpoint there, we could be looking at selling pressure that could extend this move to the downside. Again, overall, this market remains very strong. This market remains on a path towards 60 and on a medium-term basis up towards 65. So even if we were to pull back, say as deep as 55s, that could still be an opportunity for bulls to defend for a continuation into 60 and 65 ahead. So while any selling pressure may be seen, it could be short-term for crude oil, as this one has been perhaps the most bullish of the futures since November. So very strong market. Again, any pullback could still be an opportunity for a continuation higher until proven otherwise. But on a day trading basis today, keep an eye on 58.28, as any rejection there could lead to more weakness ahead. Lastly, taking a look here at gold futures, you'll see with gold here, gold really unable to get beyond the FOMC key level of 1848. That was our target to begin the week here. Last week we were looking for a bounce into 1848. It's clearly stalled here, and now a little bit of a pullback, but holding 1800s. Can price form some sort of higher low and perhaps get up toward 1800. That remains to be seen. Right now this market is kind of stuck at the moment between 1880 here and 1780 until proven otherwise, and we could continue to see chop within that range. If you wanted to draw a new key range here, you can take that high, the recent low, and the midpoint, and we may get ourselves a new key range here to watch heading into the end of the month and perhaps heading into March. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.